Okay, good morning, folks, and welcome to a stock chart analysis of Intel Corp, symbol INTC. This is for one of our members, Talon. And you can see here in the pre-market, we'll go to the pre-market price action in a moment on the charts, I think a swim. But at current, we are up $1.21 or 3.44%. Last tick, $35.20. I'm recording this 9:26 a.m. Eastern Standard Time on the 9th of July. And really quick, the fundamentals of Intel are not great. The ranking relative to Taiwan Sumi at number one in its group, Intel appears to be at the lower end of that spectrum. I don't know how many companies are in this bucket, but we'd like to go with best of breed as much as possible. Clearly, Intel is not best of breed relative to its peers. The relative strength rating, that is not the RSI, this is the relative strength relative to the S&P 500, is only 22. That's very, very weak. It is an underperformer. It is a laggard. The group strength is an A, so that speaks highly of the group, but not of Intel in and of itself. Now, where it gets a little bit more optimistic and bullish is that the accumulation distribution rating, and this is for institutions, not mom and pop buying 100 share, is now at a B minus, giving it a green symbol. The shares are under accumulation. We'll validate that on the charts in a moment. Warning flag here. We have earnings coming up soon for those looking to put on a trade, either long or short. Be careful. You have a binary event, which is earnings on the 25th of July. Last quarter's EPS change was 550%, bullish. The three-year EPS growth rate is down 55%. So let's keep things in context. While it had a good quarter, the macro trend is bearish. ROE, no bueno. We want to see that minimum in the single digits. Divi, 1.5%. PE ratio, 27. Not cheap, but not expensive. Beta, this is a measure of volatility, 1.36%, and I think you're seeing that now in the price action over the past week or so. So this is the fundamental basis for Intel. It is not best of breed. It had a good quarter last quarter. However, the macro picture is that the EPS growth over 3 years is weak. That story may be changing, but one quarter does not make a trend. So let's take a look at the recent activity of Intel. This is what you call a squeeze setup. We were in a very tight consolidation. In black, you have the Bollinger Bands. In green now, you have the Keltner channels. And whenever you get those Bollinger Bands within the Keltner channels, that sets up for the potential for a Bollinger Band squeeze. But the question is, which way does it go? Does it go up? Does it go down? In this situation here, given that Intel, markets are now open, Intel was in a long bear market and had begun to consolidate, the probability of a breakout grew exponentially, especially now when you have your moving averages, the 8 period rising above the 21 period in orange. That is a bullish setup. So this squeeze is now fired off. And you're seeing continuation move up higher this morning. And we're probably coming up here to around $37 per share. That's my short-term price target. Is it a buy right now? No, I don't think you could chase this. Institutions are not going to chase this. That's not what they do. They're going to be looking for a pullback. Let's take a look at where we might want to get involved. First, let's do a quick deep dive on the monthly view. And monthly view, we are still within a trading range. Here's that $37 per share price target I mentioned earlier. We do have some overhead supply right here at $35.21. Last tick was $30.59. Let's go weekly view. Weekly view, we have higher highs, but again, overhead supply at around $36 per share, then at $37 per share. Daily view, So on a daily view, here's your new, we just had that opening bell, new higher high. We are up on the day. The question is, do you buy it here? The answer is absolutely not. No. What you want to do, let's put the heat map on here. What you want to do, and look where you would be buying it into. What this heat map implies on TrendSpider, and there's a 35% discount code below if you want all this real-time, state-of-the-art, automated technical analysis. Get that 35% discount code below using our link. What this implies is that you have overhead supply immediately above. What I would want to do is take a step back and say, okay, if we get a pullback, which I think that we will, because remember, the Qs are overbought, SMH is overbought, SPY is overbought. We're going to get a pullback. Where might I be interested in buying these shares on a pullback? I think right here, right around 33.41. This is a 33.43% pullback on the Fibonacci's. That would be an entry point that I would find very, very attractive. Why? Because we are beginning to see on a macro view the trend begin to change. The however is that we do not want to chase this stock into all of this overhead supply. Remember, all these buyers back here from last year who enjoyed this rally up higher, look at this rally, and then they watch those profits evaporate and turn into a loss. All they want is their money back, and they are going to sell in the coming days. Now, I'm not saying it's going to happen today, maybe not even tomorrow, but in the coming days, we are going to get a pullback as sure as God made green little apples. Now, we do have some events coming up. We have Fed Chair Powell speaking today, tomorrow. We have CPI and PPI data coming out later this week, and that could impact the overall markets. Another retracement point I like here, 34.23. It's around the same as on the daily chart. Yeah, it's in the same ballpark on the Fibonacci retrace. So the logical entry point here, 34.23 to 33.43. I would use those areas as an area at which to begin dollar cost averaging into a position. Let's see how we're trading intra-period. And you can see on the 15-minute candlestick setup here, we have resistance above. I did not draw this line. This is the automated trend lines. Take them off, put them back on. Another great function of TrendSpider. And I give this away free to our silver and gold level members. So we are hitting a bit of overhead supply here on a 15-minute time frame. I'm going to go 5-minute view, and then I'm going to overlay on top of this chart, that 15-minute chart. Let's take the heat maps off. So you can see right at the top of that heat map range, we're getting some selling in there. Let's take it off, clean it up a little bit. So now on this 5-minute chart, I have the volume by price, which is showing you have sellers immediately above. Earlier in the session, we rallied up and into that 15-minute resistance level. Now we're coming off a bit. This is why you do not chase these rallies. Professionals do not chase rallies. They wait. They blow out stops right down here. If you see them take out these stops, in all probability, we're going to come down to those price targets I mentioned earlier. You need to take the leap of faith necessary to get in when institutions do. They need to create their own pool of liquidity. And the only way to do that is to blow out these stops right underneath here. Those traders may not be able to see those orders. However, they know that they are there because that's where a logical stop loss order will be. Now you can see some real selling coming here on Intel, taking it off of its highs. I wouldn't short it. I wouldn't buy it quite yet. I would just wait. With that, folks, have a profitable trading day. I'll talk to you soon. Be well. And TrendSpider, 35% discount code below. Use that link. Also, if you're interested in a 5-part video tutorial on my top 5 favorite candlestick patterns, use the link below, free of charge. And TrendSpider, I also give away to our gold and silver level members, so take advantage of that as well. I'll talk to you soon. Be well.